Good morning, good afternoon to all of you, and a belated Happy New Year to you. As Tim said, it's been an interesting year, but one of the sectors that's going to do very well this year is battery materials, and particularly lithium. Lithium has got off to a great start on pricing. But what we do at Lake is deliver something slightly different into that lithium supply chain. First of all, high purity. End users will always look to buy the best product that's available on the market, and this is it. 99.95% or better purity, that means low impurities. That's what the end user is looking for. And the other key thing that end users are looking for is a cleaner environment. They're trying not to repeat the sins of the past with internal combustion engines. And so as part of this energy transition, if you can tick the box that shows a better environmental outcome, a better social outcome, you'll also be preferentially sought after by the electric vehicle makers and the battery makers. But the only way to do that is to use a new technology. That's what we've done by partnering with Lilac out of California. This isn't a black box. It's a very well-known water treatment method. It's just been adapted for lithium. We're on a clear pathway to production. We've had a successful pilot plant in California for some time, a demonstration plant on site soon, which will be containerized. We've recently announced that we're moving to 50,000 tons per annum, which will make this company the largest lithium producer on the ASX. And we aim to continue to be an independent producer at scale. Next slide, please. As part of what we announced a few days ago is that we are moving straight through to 50,000 tons per annum production. We have a PFS that came out in 2020, updated early 2021, that showed 25,500 tons per annum. And at that time, that was about 7-8% of the market. That market has grown and continues to grow, and being somebody of scale is very important to the end user. So instead of doing a study alongside, we're embedding in our definitive feasibility study coming out at 50,000 tons per annum. This will make us the third largest lithium brine project behind our colleagues at Kalchari and in the Atacama, but this is a major project. And the reason it's gone that way is that debt is available from the export credit agencies and the demand is clearly there. As a matter of fact, it's improving our potential offtake discussions. On the next slide, we show what the plant would look like. And as we go through an expansion project, what we aim to do is build another plant alongside this. That's yet to be finalized over the next few weeks, but that's probably what we'll do. It provides greater flexibility in the process. And on our next slide, it's one that you've seen before, where we talk about how direct lithium extraction with Lilac delivers this. Instead of building 20, 30, 40 square kilometers of evaporation ponds, we replace it with simply pumping the brine out, running it through these modules of Lilac, and then re-injecting it back where it came from. On the financials on the next slide and the slide after, we show what this delivers at a PFS scale at 25,000 tons per annum, 260 million EBITDA annually on a pricing of 15,500 tons per annum lithium. At current spot pricing, that number is closer to $1 billion, and with the doubled plant, closer to 2 billion annually. That's twice our current market value for 1 year's production, and that's EBITDA. So these are serious projects now on these current prices. Even if you decided to only take half of spot, that's at least $1 billion a year. On the next slide, we show the debt support. As I've mentioned to you before, thankfully, the government of the UK through UK Export Finance and the government of Canada through their EDC are prepared to fund 70% of our current project, and they are prepared to do that as part of our expansion case as well. When we get closer to the end of the DFS, we'll come up with the numbers behind that, but that was one of the key reasons for going forward. On the next slide, we show our timeline. That is relatively unchanged. We'll be updating this if there is any changes, but basically getting the DFS done and the ESIA by mid-year triggers that financing through financial close and then into construction. We have the cash together with options coming in to fund the equity on the 25,000 tonnes per annum production. And in talking to off-takers, we'll probably go pretty close to having what we need for the expanded case as well. So don't be concerned that there's some massive capital raise coming down the pipe. Now, on our next two slides, we talk about why we would go to 50,000 tonnes per annum. This market that we've been seeing for some time on the macro side, with the growth of electric vehicles, the growth of the mega factories to build the batteries to go into those electric vehicles, continues at a fast clip. So in November, December, we were looking at 255 battery mega factories planned for 2030, of which 151 were operating at the end of last calendar year. Now, to deliver into that, we need at least 10 times growth from lithium production. And this is going to be a real headache for the EV makers. Benchmark came out in November on the back of the COP26 conference. I was in London at the same time. To deliver into the forecast they're looking for, we need more than 3,000% growth in their sector. So there's certainly room for some new producers. On our next slide, we again show another metric, but if you haven't been following the pricing is up significantly in the last 15 months. We've gone from a range of around $9,500, $10,000 to $13,500 a tonne 15 months ago, now to $43,000 to $52,000 a tonne. Now, a number of people say, oh yes, that's just spot. That's not in contracts. Contracts are changing. Offtake contracts are less and less having long-term fixed pricing. As a matter of fact, if you're looking at lithium stocks, look very carefully if the offtake is unallocated. We're fortunate here in Lake that hasn't been allocated yet, but it will be over the next 6 months. And given that demand is running at 3 times new supply, please look at the new developers of scale in this lithium space. So to that end, on our next slide, we talk about our next projects. So our Kachi project, which is in the orange circle, is just down the road from Hombre Muerto, Livent. They're listed on the New York Stock Exchange. They produce about 16,500 tonnes per annum of lithium product, and they have a market value of about $5 billion US. We're going to be producing 50,000 tonnes of consistent high quality product, so it doesn't take long to think about what sort of numbers there are as we move through the uplisting process on the main board in the US sometime mid-year. But we have other projects in our portfolio, Cauchari, Olaroz, Paso. We announced that we're going to be drilling those, kicking that off in the next few days. We announced that in December, and there'll be an update to show that. On the next 2 slides, I just give an idea of what that looks like. Our Cauchari project is alongside the second largest lithium brine producer, which is coming on stream this calendar year. And our Olaroz project is alongside Orocobre, now called Allchem, their project. And we have another one called Paso. So our aim is to drill these this calendar year, bring at least one of them through the PFS study, and then we can show this isn't a one-trick pony. It's a multi-asset producer. And maybe we can actually move our production target from 50,000 tonnes per annum to a more aspirational 100,000 tonnes per annum. The equity markets are open for this sort of thing. The debt capital markets, most importantly, are open. I want to remind you, we're not funding this all with equity. This isn't a hard rock project in WA. We're leveraging debt, which is 11-year debt at less than 3%. So don't worry about interest rate rises either. This is how we can get these next projects up and running. Next slide, please. Corporately, this was released for our AGM on Tuesday. That was a 10-day VWAP at 98 cents. It's currently trading in the mid-80s. Cash of about 70 million on the books. Market value of about 1.2 billion. And if I just go to the next slide. And so in summary, high purity lithium, unallocated supply is valuable. Don't miss this opportunity. Even in shaky markets, the lithium sector is going to go well. So please look at all of them in your portfolio, or might be. What we do different is deliver major ESG benefits and aim to be or continue to be an independent producer. Back to you, Tim.
Thanks, Steve. Bang on time. There's kind of a consistent theme here with some of these questions, namely, can you Can you provide a further update on the scheduled pilot plant and expectations for potential offtake samples?
So we'll be updating the market as soon as I can provide a more definitive timeline on the demonstration plant on site. We've been running a pilot plant in California now for more than 1.5 years. We aim to have that demonstration plant on site as soon as possible. There have been transport and COVID issues that have slowed that up a little, but we'll be updating the market as soon as we can. Suffice to say, we've got 4 containers that are ready to go. It's about just getting them onto site. We're also constructing. So we'll be updating in the coming weeks a very much closer timeline. Be that as it may, the demonstration plant runs an entirely different timeline to everything else. The pilot plant we've been running in California feeds the information into the definitive feasibility study, so it will continue on pretty much the same time track. The other question apart from the demo plant was, sorry?
Just to offtake.
And so with offtake, I can share with you that when we announced a few days ago that we have formally moved to 50,000 tonnes per annum production, even though that had been flagged for some time, it has definitely improved the urgency of some of the discussions and a sense of fear of missing out. I had flagged that we anticipate announcing one of these agreements probably before the DFS and one soon after. The discussions are getting more meaningful now, and who knows, there may even be some money coming along with those.
And Steve, a couple of questions on, will any battery testing results be shared from Novonix soon?
The battery testing results are very similar to what we released to the market more than a year ago. So they meet basic battery testing qualifications. The key thing is that the product that we produce out of a demonstration plant gets into the hands of the offtake partners, the shortlist we're talking to, and they get into that process of actually qualifying it. We'll continue to do testing with Novonix, and we'll have more to talk about that in the future. But really, for now going forward, because of the names we're talking to, they're just quite keen to work out the basic commercial terms we're looking for, which is that we've got a market priced pricing for our offtake on a quarterly basis, where we look at benchmark pricing for the last quarter and use that for the next quarter, and that it's of a significant size, and that we work together. We're not trying to be just another raw materials provider, but actively part of that supply chain.
And Steve, you kind of copped a bit of criticism this week from a fund manager from Paragon Funds Management. They only manage 60 million. He questioned the kind of the technology and your JV partner in particular. Would you care to respond?
Certainly. Naturally, if you're an investor and you've historically been in the resources sector, you're going to be not necessarily favorably predisposed towards new technology. But we've already seen that with the old technology, not only are you producing a poor quality product, but you're leaving half of the asset behind. If we're looking at the sort of things with evaporation ponds now, 45, 55% recovery versus 85 to 90, and at $40,000 a tonne, you're losing hundreds of millions of dollars of stock in the ground all the time. So that's the first thing I would say. The second thing is, I understand not supporting new technologies. That's why few people supported Tesla until they had a market value that was larger than Ford, GM, and Toyota combined. So we're more than happy to demonstrate all of these things, and for those who are naysayers to then come into the stock later on when we're listed on the US, when we're part of the ASX 200, and maybe a $5 billion market value company. I also understand that here in Australia, it's easier to support digging a hole in the ground, and there's absolutely nothing wrong with that. Lithium is going well. We need all of these lithium products. What we're saying is the market, the electric vehicle maker and the battery maker are looking for consistent, high quality products. That's what you can do with this technology. We've demonstrated that in a pilot plant, and we're just going to show it at the demonstration plant on site. What you do in 1 or 2 modules, you do in 10, 20, 40 of them. All we're doing is processing water. There's very little scale up risk. The bank debt is behind this, and I must say the off-takers are behind it. So it's going to be a heck of an exciting year. And for those of you who follow, the great thing is when we've got naysayers, that continues to create a market and provide opportunities.